What is up, everyone? This is your friend Paul. So you know what's funny? I'm an avid chess player. I'm on chess.com and I play 10 to 15 games a day. And what's amazing to me is chess.com, when I joined it in April 15th, 2016, they would average about 3 to 3.5 million games a day. They're already at like 18.5 to 19 million games a day. But what's even crazier is the vast majority of people I play are not in the United States, of course. In fact, when I see some in the US, I'm always kind of surprised by that. So that leads me, when we started our channel in 2020, mostly it was US people. And now we're about, 55% US and 45% international? Yeah. So I always start every live stream, no matter where we're going, and saying like, hey, where are you from? Because it's amazing to me. Every time I go out of the country, somebody like recognizes me. And that's amazing to me because it's like, it's out of the country. So you don't expect, first off, I don't expect to get recognized anyhow, but then you go and you get recognized in another country and it's kind of amazing. So, drop in the chat where you are from. I personally, should I be getting rid of this, Tim? Okay, let me get rid of that. Well, I'm gonna splice out pop out the chat. Let me do this. Okay. So my cousin's in Europe right now, and I was telling him the other day that I think it's amazing that so many young people travel. Tim and I are about the same age. Tim graduated 98 from high school. I was 99. Tim, did anybody in our high school, like in college, travel as much as the kids are these days? Nobody's traveling like that. It's amazing to me. Yeah, traveling was Florida. You're right. Once a year, everybody went to Florida. So anyhow, the reason for this live stream today is something that absolutely changed the way in which I handle my money. It doesn't change the way in which I invest, but it has changed the way in which I handle my money. One of the most frustrating things about investing is you need patience. And patience is a lot harder. Everybody says they're very patient, and then when it comes to it, they're not. Of course, I believe I'm patient. It's been proven by the fact that I haven't bought into this super huge, bull market entirely. I'm still majority cash, but I still have made some investments. But 5 years ago, I learned about selling covered calls and cash secured puts. The reason I loved it so much is it allowed me to make money day one. It allowed me to keep myself busy. So here's the other thing. Successful investing is about distracting yourself. Investing is one of the few places out there, the few things out there that the more you do, the worse you do. The more active you are, the worse you are. There's countless studies about this, that the most active accounts do the worst. The best accounts are the ones that do nothing. I'm very disciplined. When I go to my brokerage account to sign a document for them, I actually block the balances. Whether the market's up or down, I block the balances because I don't want to get myself attached to a certain number. I don't want to get myself excited that my money's up. I don't want to get myself sad that money's down. Now, I don't really get sad when the money's down because I know what I'm buying. But what I do love is checking my options income every single month. And my goal for my options income is to live 100% off it. Because every month, Dalton, who's in the chat, by the way, Dalton handles my options, my brother's options, Mo's options, our family's options. He does all of this. And he does it every single month. And we've taught him how to do this, and he's done a great job with it. What's most important is, of course, we can't go back in time. And I'm still fortunate to be 43 years old, going to be 44 in a few weeks. But I'm still fortunate to my financial situation. But I have apartments, I have businesses, I love investing in them. I hate taking money out of them in order to live. That's why options have been so great for me. Options have allowed me to just sit there and say, I can live 100% off my options at some point and enjoy my life the way I want to and never touch my money and allow my money to grow. This is something I learned. I started doing back in, let's call it June 1st of 2020. It was actually like May 27th or something, but call it June 1st, 2020 that I started doing this. And literally the only time in the world I've ever thought to myself, I wish I could go back in time and tell myself something, it would be to go back to 1997 when I started investing and say, learn how to sell covered calls and cash secured puts. If I had learned that, I would have so much more money today. I'd have so much more income today. It would have been absolutely incredible for me. This is, Chicago. Look at that. Maine. One of my first ever investments in a stock was Bangor Hydroelectric Plant in Maine. It did very well. Mexico. That's awesome. Bailey, what part of Mexico? I assume you know we're in Manzanillo.
Germany, Kansas City, Israel.
Oh, wow. Israel.
Dallas.
Dallas. What part of Dallas? Where's Dallas? I don't see the Dallas. Oh, there it is. I'm not moving there. I'm not moving to Dallas. I have a home in Dallas and a home on Cedar Creek Lake, southeast of Dallas. I rent both of them out on Airbnb, but I go there quite frequently. My stepson lives in Dallas. Yeah, it's a great town. God, you guys have so much traffic. I don't know how you guys deal with that. So if you guys know, like I started investing, call it 13, 14 years old. It was the dot-com bubble. It was all the hype. And guess what I bought into? The hype. With that said, I remember back then asking the question, yeah, but how is this stock worth this? How do we know it's worth this? And I remember people just saying, it just is. And I just bought into that. But I bought into the hype back then. I sat there and said, listen, the internet's changing the world. Of course, these internet companies are going to do great. Now, I got lucky enough, but I bought Global Crossing because my sister's boyfriend's father said it was going to be the next big thing. And it went to zero. I had no idea what I was buying. And that changed the way in which I looked at investing. Fast forward, we always learn as we go along. I didn't have YouTube. I didn't have a community like this to be able to talk to and understand things. I'm quite sure if I had found a YouTube channel like this one back in 1997, I would have been a totally different investor even today. That's what's incredible. Now, when it comes to cash secured puts and covered calls, which I will explain more about what they are, the reason they're so awesome is it allows me to focus, to keep buckets. My investment bucket, my options bucket. When I say my options bucket, I don't have separate stocks in there. I make money from my investments, put it with options, putting it into my options bucket. Now, options have a bad rep of being not a bad rep, an understandable rep of being very volatile and risky. That's exactly true. But the way we're doing options is from a value approach, generating monthly income on a diverse group of stocks to generate consistent monthly income. This is not a way of trying to time the market. It's not a way of taking advantage of a mispricing somewhere. I have no desire to do that. I have zero desire to do that. I own 28 or 30 companies right now. 20 of them basically have options as a way of being written against them because not every company can be. But over the last 60 some months, actually 60 months exactly, I have been able to come up with a process that makes sense to me. I'm going to go through that here. By the way, guys, at the end of this, I will be doing a giveaway. 1 year free of Everything Money software. You got to stay on the video because I will ask the question at the end and you've got to email the answer to a certain email. So right now in the chat, like I saw somebody say, Paul, I've been selling covered calls and cash secured puts. And we did a webinar like this about a month ago. And we had about 25 people sign up for a quick class. One of the people already signed up. We're trying to see if we can get him on today, but he has a work conflict, but he's trying to see if he can get on. He literally makes in 3 weeks, in 1 week, what the entire class cost him. And it's not like he's rich.
No, he 3X'd.
That's what I mean. But in 3 weeks, he 3X'd.
Yeah.
So in 1 week.
Since then, he's been doing more. Like he shares his wins in the options chat. And so like Dalton's been really active chatting with him. His name's Tom. So Dalton can share in the chat as well.
Yeah, that's awesome.
His wins.
He's great. Oh, Mohammed's from Kuwait. Hey, he's I'm from Iraq. I don't know if you knew that, Mohammed. I'm sure you did. Thanks for watching us. This is, and it's funny to me because I've had a few people, when you get into options, the reason we're doing this, I've had a few friends hear what I said, they do it, they like it, and then they just start to like dissipate a little bit. I'm like, well, why are you not doing it? It hasn't been top of mind. And I'm like, okay, but this is a total game changer. Like literally my brother and I are just like, this is a total game changer for our money. And the best part is if you have a tax deferred account like a 401k or IRA, you can grow the money tax-free. Like I pay ordinary income on my options income. Why? Because it's ordinary income. But the options income in my 401k and IRAs are tax-free growth. And they can compound and compound and compound. And I love seeing that money. You know what's funny? I hear the people talk about dividends. Twitter's big on the dividend people. I'm a dividend investor, which I won't get into the fact that you're not really a dividend investor, et cetera. But I look at it going, but with the dividend though, you're taking money out of the company and putting it in your pocket, therefore decreasing the value of the company. With options, you are not doing that. Is it a free lunch? It is not. There is a way to lose money in options. As an example, just to give you guys a heads up, 2 months ago, and I'm going to be full disclosure here, I made about $19,000 in options. Last month, I made $2,500. Now, over the last 60 months, I'm estimating here, I think I had 56 profitable months. I had 4 non-profitable. But the point is, last month, a lot of stocks took off on us and I had losses. But when you're selling against 20 to 30 companies, some are going to have losses and a lot are going to have gains. That's the idea behind options. If you're only selling it on 1 or 2 stocks and you're being very aggressive, it can be risky. I'm going to show you my way. Now, there'll be other people in the chat who will say, Paul, I'm much more aggressive than you and I like it. More power to you. I'm just here to show you the way I do it, but you can apply that to the strategy that works best for you. Yeah, you can. Yeah, option sellers. So option sellers are basically considered the insurance holders, the insurance writers. That's what's interesting. Now, you might sit there and say, okay, well, if I can't touch the money that's in a 401k, why do I want to do it? Well, if you could add 3 or 4 or 5% a year to your retirement portfolio, how much would that change your retirement? That's the big thing. So let's go to our retirement calculator here. Let me put in a historical one here. Let's say you're 30 years old. And let's say you put them in market performing assets. You're going to retire at 65. You have 100,000 in savings. You save 10,000 extra per year. You increase it. Your returns are 9.5%, 6.5% during retirement. You're going to live to 95. I'm skimming through a lot of this. The bottom line is you have enough money to retire. You'll retire with 6.6 million and you'll die with 8.9 million. Now, let's say this is all in retirement money. And let's say you can add 3% a year to that. And then in retirement, you're selling more. Let's say you only do 2% a year. Now, look at this number. Instead of 6.7 million, you have 14.6 million. This is the possibility. Now, it's not a guarantee, but 3%, I have not had a year of 3%. It's always been higher. This year, I'm on pace for like 10%, which is a fluke. They started out the year very strong. Actually, it might not be that anymore because of last month. So it's probably a lot lower. Probably like 8 or 9% now. But the point is, you get the option of retiring with a lot more money, 14.6 million. Or if you need that 6.6 million to retire, you're retiring at age 58 instead. Right? 7 years earlier. This is the potential with options. And when I tell you everyone's capable of it, it's just like investing. Everyone is capable of this. Like, it's literally mind-blowing to me that I have friends who are multi-millionaires who don't do this. Why? Because they have financial advisors who don't have an incentive to do this for them. That's the problem. You can do this on ETFs. You can do this on stocks, but you have to do them on stocks that have volume. Like, you can't do it on some $200 million company in your they're not going to sell options on that. You got to do it on larger companies or big ETFs. But guess what? That's okay. The whole point is you can generate, even if it's 1.5% per year extra. So take our 9.5, go to 11. Take our 6.5 and go to 7.5 for only 1% extra. It's still $3 million more. Remember, we talk about this all the time, how much that 1% costs you every single year when you pay it to a money manager. That's how different this is. Now, the original story about how I got into options was not through covered calls to start. So covered calls are when you have stocks and you sell someone the right to buy that stock from you at a future price at a future date. Okay? I will get into that shortly. A cash secured put is when you have cash in your account and you want to buy a stock and somebody pays you the right to buy the stock at a lower price. So you're being paid to wait for a stock to go to a lower price for you. This is very useful for value investors. In fact, it's so useful, Warren Buffett bought his first position in Coca-Cola using cash secured puts. He made $7.5 million in cash waiting for Coca-Cola to fall in price. And guess what? It did fall in price and he got the stock, but he kept the $7.5 million as well. That's the great thing about both cash secured puts and covered calls. You still get the money no matter what happens. That was my intro. I think Chipotle was selling at like $360 a share. And I was talking to somebody and I said, I like Chipotle at 280 or something like that. He's like, let's sell a cash secured put at 280. So basically with Chipotle, it was at 360. Somebody paid me money. So if it fell to 280 or below, I got the stock for 280. Now what's the risk? Well, what if it falls to 250? Guess what I'm paying for it? I'm still paying 280. But for the value investor, they're okay with that because their thought was, I was going to buy it at 280 anyhow. The second it hit 280, I was going to buy it. But psychologically, it's hard for people to see a stock selling for 250 that they have to pay 280 for. That's the loss that you have. But you don't have that loss because if you're going to buy it at 280 anyhow, it was going to go down in value anyhow to 250. You're still going to lose that money anyhow, whether it's cash or the value of your stock. Does everybody understand that? That's very, very important to understand here. That the true loss on a cash secured put, you would have had anyhow. Let's go find a company right now. I'm just going to pull up let's pull up Google, for example. Let's pull up Google. And by the way, I'm only using Webull because they have good options change. I do not get endorsement. I do not endorse Webull. I have no desire to talk about Webull in the sense of like, if you want to sign up for Webull, have fun. I get nothing for it. I don't even have a link for it. Do whatever you want. But let's go out a month on Webull. That would be the 11th of July. Sorry, on Google. Google's currently at 181. These are the puts. If you want to buy Google for 160, somebody will pay you 62 cents to do that. So they'll pay you 62 cents for every share. And if it falls to 160 or below, you keep your 62 cents and you get the stock for 160. That's the big thing. The way I look at it is I'm saving 21 bucks. And for a value investor, that's important because what if you say Google's not worth 181 to me, but it's worth 160 to me? It allows you to sit there and like, I'm not buying it until there anyhow. The second it hits let's say it went to 160 tomorrow, you'd have bought it, and it goes to 140. You're still going to lose 20 bucks. So you might as well get paid for that wait time. And when you're using your cash on these things, the returns can be 10 to 15% on your cash. That's the amazing part. So I'm throwing a lot at you, but the cash secured part tends to make more sense to start. That's why I start with it. Is it allows people to wait for a stock to hit the price they want. Now, the hard part, what people do is if Google's selling for 181 and they think they're willing to pay 190 for it, and then they sell a much lower price on it. Well, at that point, my comment is, why don't you sell a put for 180? If you're willing to buy it at 190 anyhow, get the $4.60 if you want to add to your position. Or if you want to start your position, I always tell people buy a little bit and sell a put. You can also sell a put at a higher price if you want. But the whole point about it is it allowed the idea behind it is you're being paid for a sale. That's like going to the store, seeing a shirt you like for $100 and the store telling you, here's the deal. We'll pay you $1. And if it's $90 in a month, you get to buy it for 90 bucks. But if it's 80 bucks, you also have to pay 90 bucks for it. That's the idea there. You get to something that you want. You get to be paid to wait for a lower price. This is literally up the alley for value investors. It's a great idea. And the most important part is if you're doing it systematically, month in and month out, some will work out great, some won't. But the point is, with cash secured puts, you either get the stock you want, the price you want, or you make 10 to 15% annualized on your cash. Because look at it this way. Let's say it's $1 here. Let's say you want 165 for $1. So what's the return here? Well, how many days from now is July 11th? How many days from now is July 11th? 31 days. You're getting $1 divided by 165 times 31 out of 365. So basically, let's do the math here. And you know what I'm going to do? I'll show you the math. Ready? Guys, guess what we have? We have an options calculator on our website. So a put, 1 share, Google, strike price, 165, expiration date. I'm picking July 11th, premium $1, calculate. My annualized return is 7%. So for me, I'd sit there and say, hey, Is it really worth it for 7%? Well, my cash is getting 4.25. So 7% ain't bad. Maybe I wait. Maybe I sell a higher strike price. If it's still worth 170 to me, I can do that. But this is what's useful. This is the calculator that we always use on every trade we make. And it's in our community right here. It's part of our software. What we do, it tells us the return we're making. Because the math is way more annoying to do. But let's see another one. Let's see. Why is this not popping up there? Okay. So $170 is $1.67. So I'm going to do $170, $1.67. That return, 11.57. But remember, you only do that if you're okay if you want the stock at 170. Don't use this as just a way of generating cash in return for you. That's the entire point here. Cash secured puts. I remember when I heard about this, I go, wait a second, this is too good to be true. I'm getting paid to buy a stock at a lower price. So you guys have heard me talk about Gary Mashuris, good friend of mine in Boston, great value investor. His returns haven't been the best, but I think it's because of the stocks he's in. He's in smaller cap companies. I called him up and said, Gary, somebody told me about covered calls and cash secured puts. He goes, yeah, absolutely, you should be doing this. And I said, and why aren't you doing it? He goes, because my fund does not allow that. I was like, this is great. But he's the one that told me, Paul, you should wait for 15% returns. I don't agree with that. I think for my cash secured puts, I'm okay with 10 to 15% annualized returns. Because I look at it going, why would I not be okay making 10% of my cash to buy a company I want at the price I want? That doesn't make any sense to me. All right, so far, we've covered a lot about cash secured puts. Before I go into covered calls, I want to make sure that everybody understands this cash secured puts part. Are there any major questions? Guys, can you watch out for questions for me? Because I don't have it really oh, there it is right there. I can't see the options calculator in my account. It's only for the options community, Bailey. That's why. It's only for the options community. So, Bertastic, the cash is secured. When you sell a cash secured put, this is a great question, Bertastic, but the cash sits there unused. Let's say you have cash in your account that you, for example, I always tell people, hit your goals with your ETFs. And then if you have extra money, use it to buy individual stocks. That extra money, I don't think you should just put it all into individual stocks. Wait for opportunistic good times. That's the cash you used. And the bank will basically put a hold on that cash for you. But you're making that kind of return, annualized. It's only held on to you for 3 or 4 weeks. Makes a lot of sense to me. So like we said, the options calculator is only for the options community. And we'll get into that shortly about how you get that. While going over covered calls, you should go over the buy right strategy too. Love that strategy. I don't even, by the way, John's right. If you want to trade, you can do that with options as well. Options are a way, but that's not for this class. This class is purely using options to generate income on your portfolio and on your cash. That's it. Bertastic, you're 100% right. Options are confusing until they're not anymore. That's exactly the reason why we created this whole entire class and this community, because we want people to be around people who think the right way. Tim, go ahead.
Bertastic also had a question earlier about really kind of a statement and a question. He has VOO, V-O-O, and he was worried about losing his shares doing it, them getting called away.
So we'll talk about that with covered calls right there. Well, Silver Bullet, no, you still get access to the software. This is a separate piece of the software, and we did talk about that in our recently. Just like trading is an extra aspect to the software. Everybody doesn't get access to trading because in actuality, people don't want access to trading. They don't have it. And the other thing is we are spending a lot more time with people. We're putting a lot more of our user resources into having this community of people. And it's people who have spent a lot of time and effort and money doing this. So we want to keep them exclusive. Oh, good for you, All Might. When placing a put option on a stock, why would the calculator show a max loss of the same amount they're paying me to buy the underlying stock? Well, so that's not here. That's Anish. That's a banking thing. I understand completely. Because theoretically, the stock could go to zero. Theoretically, the stock goes to zero and you could lose all that money. That's the theory behind it. It's a possibility. It's not a high probability. Anthony Media, what percent of my cash using to sell cash secured puts? I wish it was 100% of my cash, but I'm very strategic about it. I just pick the stocks I want at the prices I want. That is very, very important. I only sell cash secured puts on the stocks I want at the price I want. I never have FOMO because in order to get the price has to fall below my strike price. So for example, on the Google right here, for me to get the stock at 170, the stock's basically got to fall for 170, below 170. But I still get my $1.67. So my real break even is 168.33. That's my real break even. At 168.33, I collected 167. So it's basically like I paid 170 for that thing. That's the real break even. So I wish I could do it on all of them. Yeah. How do taxes work with options? They're considered ordinary income. Go to a tax professional to verify that. But I basically just, because they are, even long-term options are considered, I think even options over a year are still, but I'm not an accountant. Oh, Corpus Christi. I was looking at houses there recently for Airbnb. All right, does everybody seem to have a pretty decent grasp on this right now for cash secured puts?
Stuck on sports, so are you getting paid? You want to look at that?
Correct. You're getting stuck on sports. Great question. You get this premium no matter what. No matter what, you get the premium. That is your money. Now, if you get the stock, the way the accounting is going to work is your brokerage is going to basically subtract this from your price of your stock. So the broker is going to sit there and say, you paid a 168.33 for the stock. But if the stock ends up above 170, you still keep the $1.67. The same thing with cash, with covered calls. You keep the premium no matter what. That's a great thing. It's also a way of absorbing a little bit more of a loss. If it doesn't hit the price, Corey, you just keep the money and you write it again. You go find another one. If it goes to 172, you don't get the stock and you keep the $1.67 and you don't get the stock. You want to do one more example? Okay, so let's find another company. Let's pick up SPY. Let's do an ETF here. Now the ETFs are going to be a lot lower return. Yeah, I don't want to do an ETF then because it's a shit. Well, let's do an ETF. Let's say you say, okay, I'm going to buy an ETF today. I'm going to buy one share of SPY or whatever. By the way, you have to do it on 100 shares. We'll get into that in the specific group about how you can write what's called the poor man's covered call and the poor man's cash secured put. But either way, you're getting $1 to basically get the stock at 601. It's currently at 601.23. So you sit here, you get the 94 cents at 601. So I'm going to pull up SPY in here. SPY. You have to put one share, strike price 601. Is that what I selected? Yep. 94 cents. Oh, wait a second. Let me go to July. It's way higher than that then. 969. Look at that. For July 11th. 969. Thank you. Good catch, Nick. Look at this return. Why? Because it's so close to the strike price. The price is current. So basically it's like if you say, hey, I'm going to buy the stock today. Let me just wait a month and get paid for it. Now, what's the risk? The risk is the stock that SPY goes to above 610 or something like that because you're getting $9.69. $9.69 in premium for 1 month of waiting. That's a big return. Annualized, that's 19% annualized return. That's insane. That's insane. That's crazy. So that is an example of buying something. Oh, thank you very much, Stuck on Sports. By the way, Bertastic, it's funny. Let's look at the VOO. Let's look at VOO on this one, though, because VOO is probably pretty good still. Let's go to our options. VOO, July 11th, 552, 5870. It might not be as good, I know Tim found that with SPLG. Didn't you find that, Tim?
Yeah, SPLG, which I was buying for my son in his custodial account, isn't as good, the options chain, as VOO and SPY.
So I'm going to go to July 11th, calculate. It's about the same. Not bad. 18.54 versus 18.98 for, yeah, it fluctuates. So it's actually pretty close. Now the volume's probably much bigger on SPY than VOO, but it's basically right there. Oh yeah, so there you go. Bertastic just said it. Yeah, you're right. The volume's not as big. Let's see the volume here. Yeah, it's not nearly as big. God, I love this calculator. This is great. I'm really glad we made this. I'm really, really glad we made this. So important, guys. And you can do it on any stock here. That's what's great. You can do it on any stock here. SCHD options suck. Do they? I haven't even looked, and I have SCHD. But I think you're right. I think because I let Dalton just have at it. Let's see SCHD. July 11th. Yeah, not the best. 45 cents on 27 bucks. That's not great. Put 127 0.45 July 11th, calculate. Not bad. 19.6%. That's not bad. That's pretty good. That's at the strike price, basically. All right. So what's the difference between buying a put and selling a put? Ernie, let me answer that real quick. Depends what your strategy is. Basically, if you're buying an option versus selling an option, whether a put or call, you're basically acting as the insurance company when you're selling an option. You're basically giving somebody else the right to either put shares in your hand or call shares away from you. That's all it is. When you're buying them, you're paying for the right to put shares in someone's hand or call them away from them. That's the difference. That's what a put and call, the words are. Call away from them, put in their hands. If I sell a put, I'm giving somebody the right to put shares in my hands. That's a call. You're selling a call. You're giving somebody the right to call shares away from you. That's the big thing. Mr. Green, Paul, in positions that got called away, I like to do the math to see if we would just held the shares. So, Mr. Green, great comment. He's talking about shares getting called away. I never allow shares to get called away. Now, in American options, they can be taken away early. That's the only time it happens to me. At the end of the month, I close out all my options, whether a gain or a loss, and I write it all against. Remember I said earlier, I made $19,000 last month and $19,000 in April, $2,500 in May. The reason this is only $2,500 is I had a bunch of losses against a bunch of gains. I never allow my shares to be taken away unless they get taken away early. I can't control that. Like I can't control if somebody wakes up tomorrow and says, I'm taking the shares away. Now, granted, for that to happen, the price has to move very drastically, very quickly. But that's, history has shown, that's why we talk about this for generating income. I believe I read a study once that said basically, if you allow the shares to get called away, you'd have done better just keeping the shares. Now, Gary, who's a very math-oriented person, said, well, you can gain 1 or 2% a year by just writing it out. I personally choose to never let my shares get called away ever on a covered call. We'll get to that shortly.
Is there any further math to do for Mr. Green?
No, the math on that one is it has to involve like a history of study. So Leopold, that's what we're talking about here when we're talking about this software. The options calculator is part of the options community. Okay, so let's call about covered calls now. Well, let me ask this one, John. So I treat them completely separate. The margin of safety to me is what price am I willing to pay for the company. After I have that price, then I'm selling the put to that price or lower. That's it. I don't merge them together. I think of them as completely separate buckets. I have the stock I want and the price I want. For example, let's go to Google here. Let's see my stock analyzer on Google. Last time I did Google. The stock I have worth like 210 today. So if I wanted it today, it's at margin of safety? Probably not. Let's do a 12% return across the board. And I'm not saying that this is the right number. Well, look at that. Isn't that ironic? 166 is the price here. So I'd want to sell a 165 put. I look at my margin of safety. I need it to be 166 or below to hit my 12% return. So then I go to 165 and sell it from there. I don't mix the two. All I care about now is, okay, what kind of option income can I make on that? That's it. And the return's not great, 7.5%. Better than my cash though, but it's 7.5%. Okay. Paul, when are you announcing the winner of your last meetings quiz? We already announced the winner. The last meetings that we announced the winner already. And they got notified. Now, for a covered call, what's a covered call? Well, a covered call is basically like renting out your stocks. People always say that, and I get it. I don't really like the analogy a ton, but basically what you're doing is, let's say you have a share of Google. Okay, and Google's right now at 181. So let's pull up Google and Webull. I'm going to pull up Google again. I'm going to pull up the options chain. I'm going to pull up a month from now. Here are the calls on the left side. As you can tell, calls right here. Google's at 180.68. Now, delta here is the chance of this event occurring. I like to sell between 10 and 15% delta. So right here, the $200 call for Google is paying about 89 cents. So what I'm doing is I'm telling somebody, hey, on July 11th, if Google stock goes above 200, you get the shares from me. I get every gain from 180.60 from today's price to 200, and you get everything above it. If it stays in between there, I keep my stock and I keep my 89 cents. If it goes above that, I still keep my 89 cents, but I lose the shares. So as I was saying before he was saying, what if it happens if your stock gets called away? Let's say Google goes to 205. If it goes to 205, I got 90 cents. So basically it's like a $204.1. And the call was for 200. I lose $4.10 per share. I just write it off. I exit it, keep my shares, but I take my loss on my options, and I'll have other options income that I'm writing it off against. Of this. Somebody help me who knows Webull.
Just click that theme color black.
How did I not see that? There you go. Thank you for whoever said that. So that's the idea there. I sell a call option at $200. The stock's at 180. Everything above 200, I don't get. Everything between 180, anything below 200, I get to keep the premium and all the gains. And above 200, I keep the premium, but I lose all the gains. That's a covered call. I'm basically telling somebody, hey, if you want to take Google from me above 200, at 200, if it goes above there, you can have it. But again, what I'm doing is I am trying to write everything off against each other. So I'll have Google, Micro, all these companies in there. Some will make a lot of money in terms of the options. Some will lose some money. And I write them off of each other. I'd love to have Dalton on here to talk about that because he keeps very active. He'll say, hey, Paul, we had a couple stocks move against us. And there's other ways in which what Dalton does is rewrite options in the middle of the month. If an option skyrockets in value where we make a lot of money quickly, we'll exit it and redo it. That's not for this class. That's a very complicated thing that we want to guide people on, and people who understand options can generate a little extra premium by doing that. Isn't the option wheel strategy a no-brainer in retirement accounts? So the option wheel strategy, it's the whole buying and selling. You lose a stock, you sell a put to get it back, and you do it over and over again. I have never run the numbers on if it's better to just own it versus do that. But a lot of people love the option wheel strategy, especially those who want to generate income on their portfolio, like he said. Now, the taxes are big, but if he's doing the retirement account, it can work out well. I have never done the math on the options wheel strategy to see if it's better off just to keep the stock. But I recently lost Sprouts Farmers Market prematurely. at like 160 a share when it fell. And I immediately bought the shares back and actually sold some puts on it. And it fell a little bit. It did well. And now it's back up again. But whenever I lose a stock, it's something that Dalton and I try to avoid at all costs. How do we avoid losing the stock? How is this going so far for people to understand?
And ask Mr. Green if his feels like his question was answered.
Mr. Green, do you feel like your question was answered? Please let me know, because it seems like you're really big on options. I really like the fact that you're really trying to get it. I love the fact that you're really trying to get it. So with covered calls, it's for stocks you currently own. For cash secured puts, it's to add more stock to your account. You might own the stock already, but you want to add more. Remember, there is no free lunch. No free lunch. The good news is you can do this on 15 to 30 minutes a day. Just keeping track, seeing where your options are, and moving on. Now, guys, the funny part is this is not new. Wall Street has been doing this forever. Like I told you, Warren Buffett bought Coca-Cola. You could Google it. How did Warren Buffett use cash secured puts to buy Coca-Cola? Go Google it. It'll tell you. He made $7.5 million in income waiting for Coca-Cola to fall 10% in price. But the funny thing is, I know financial advisors, only one knows how to do covered calls and cash secured puts, and they don't even do it. Remember, if it's not for you, it's not for you. I get that. But Warren Buffett did it. A lot of value investors will do it as a way of saying, hey, listen, might as well give me some income while I wait. This will allow you to hold your stocks longer also, because now if you're making income off your stocks, you're going to be less likely to jump in and out of stocks. You're going to look at it and saying, okay, I have a stock. It's meandering about. Like, yeah, it went down in price, but I sold covered calls on it. I made well with it. It's a good way of hedging. It's a good way of hedging your losses too. The best investors in the world will hold their stocks. We've all seen that. Well, not as of late, because the bigger investors now are going in and out, but they built their wealth by holding stocks. It's really, really important to do that. And I showed you guys in the retirement calculator how it can be a total game changer in your money. Now, when I first started with options, I knew nothing about it. I was a total beginner. I dabbled in. I dipped my toe in. If you want to try this, guys, don't do it with your entire portfolio. Do it for a little bit of time. You can paper trade it. Go take the number. Hey, if I did this, do it in a few stocks. But remember, you could have some losses early on. I do this for a portfolio. But this is the reason why we're doing the class. We have people in here that are going to be part of that community. They're going to be able to sit there and help each other. We're teaching everyone how to do this. And one of our, like I told you guys, one of the students, he literally had never done this. And within 3 weeks, he got 3 times his money back. Were we able to get a hold of Tom, or Tom's still working?
No, he can't make it.
Okay.
By the way, you can show that. You can go to that chat.
Oh, there's a chat that shows it? All right. Can you guys put it up? Because I'm probably not going to be able to. Now, the great news is, guys, the thing I like about options is, since I started in June 2020, where's the market gone? It's gone absolutely up. So covered calls should be worse, and I've still done well. It's a great way to hedge. And when stocks are going down, you're going to make a lot more money on covered calls, and you're going to get a lot more stocks at cheaper prices, and you're going to be paid for that. Remember, April, the market bottomed and skyrocketed, and I made a killing. May was another big month. I didn't do as well because a bunch of my stocks skyrocketed. The big thing here is this is something that you can do the rest of your life. And the best part is it keeps you busy, which keeps you from making emotional mistakes on your investing. That's what I love about it so much. Now I just sit there and go, what's my options in this month? What's my options? Oh, this stock fell. Great. Let's sell more covered call, cash secured puts on it. You can take control of your money. You can have more control over that income. I look at it as like, I remember early on when I taught this to somebody, they had $1 million portfolio and they're making about $4,000 a month off that. And I looked at him and said, what's $4,000 a month doing? He's like, it's covering my mortgage, my car payment, and my wife's car payment. I was like, so you're basically getting all 3 of those things for free. He was like, basically. Now, I don't think he was factoring in taxes there. But at the end of the day, even if it's his mortgage, it's basically living in his house rent for free. Now, he's a disciplined guy. We're really big here on teaching the discipline of it. Some people, like, by the way, for those of you who sell covered calls, what deltas are you selling at? So delta, remember, is the chance of the event occurring. It's always going to be right here. So it makes sense. The closer you are to the strike price, the higher the delta. The further away from the strike price, the lower the delta. So right now on Google for July 11th, according to Options Market, the chance of it going $210 or above is 5.5%. Now, I also saw a study recently that said this number is exaggerated on the high side. It's usually lower than that. That's what a delta is. I like to sell between 0.1 and 0.15 delta. So basically a 10 to 15% chance of the strike price being hit. So if I sell it on 30 companies, it's about 3 or 5 companies will hit their strike price. The rest will not. Okay? And that's why we're doing this whole class. This whole class, it's called the Freedom Wealth Project. And the reason being is it allows you to either retire richer or retire sooner or some combination of both. On June 17th, we're doing the live training with me. I'm going to go walk through examples. I'm going to sit there with you in the group training, and it's going to be a small group of people. It's going to be a small group of people. We're going to allow everybody to have hands-on training with me. Now, I always have people asking me like, hey, Paul, how much would it cost me to buy your time? And I'm like, well, for 1 hour, I usually charge about $5,000. Every single time somebody pays it, I increase the price because I don't want to do the one-on-ones. I like the coaching on the groups because then people can feed off each other. So that's one live stream that I'm doing right there. The session will also be there'll also be a session with Dalton. That's on July 1st. Now, Dalton's the guy that handles Mo's, mine, my brother, our family's options every single month. He writes about $90 million of options. He's going to be your accountability coach. He will sit there and help you along the way. Now, Dalton's time, what's that worth? $2,500, $3,000? You're going to get the step-by-step guide that we give to people. We're going to have the exact tool I use for this exact tool. That tool that we gave is so valuable. If you just type in the numbers, it tells you your return. I can tell you how to do the math. And you're going to be like, well, you can probably figure out the math. It's premium divided by strike price divided by the number of days times 365 times 100. 1.64%. Or you can just put the math, you can just put it into your calculator and it spits it out for you. And you get all the software, you get everything involved here. That software alone is a $588 value for the full year. And the other thing is you get every replay. You get to look at all of this whenever you want. So if you miss a live, you can watch it any time. All of this, guys, is worth about $10,000, $9,400 according to my calculation. But we're doing this class. It's $1,497, $1,497. And like I told you, if you have and you might sit there and say, well, Paul, my portfolio is not big enough. Trust me, you want to get started, even if it's just to learn that. Because the second your portfolio is big enough, you're going to wish you had done it. Because this is an introductory price of $1,497. We're going to be doing this class over and over in the future, and the price is just going to keep going up. So, June 17th, go ahead, Tim.
So go ahead and look. Nick's going to go and switch screen. You just see we have this options community. So we first on May 15th had an intro class, and that was a special bonus for those people who bought that. And they had a class with Dalton, which wasn't even the full strategy that Paul's going to teach on June 17th. And you'll see here on the screen, Tom, he's already 3X'd his investment. That class at that time, by the way, was $997, Paul.
Yeah.
And what they did when they bought that before May 15th, they got that call on May 15th. They're getting the call on June 17th with you and the call on July 1st with Dalton. You know, we had sent emails to the community letting them know, hey, it's going up to $1,497. And then obviously today it's going live at $1,497. But Tom's already 3X'd his money. So whether he would have paid $997 or $1,497, he was profitable. He also since then has been doing other calls. There's other people in here besides Tom, Jude, and you can see that Smokey Beetle, all these other people are in here, and Dalton's in there just holding hands. Well, essentially, right, Dalton? Dalton's in the chat, so he can go ahead and describe with you what they're doing, what they're talking about. But essentially, he's going through real life examples. There's even exclusive content that Dalton recorded, which was when he went and did and wrote your options and Mo's options. He was showing people what he was doing. So there's a lot of value to it. It's not just the 2 classes. Obviously, you're getting Everything Money software for a full year. That's going to be included. If you're a current member, it'll just extend you a year, but there's value in that. But the amazing thing is that you get the classes, you get the strategy. And Paul, you've said this before, you would want to go back and teach Paul 20 years ago.
Oh, 100%. 100%. Because I just look at the money that I've made in the last 5 years on it, and I go, damn. But you can't, I mean, listen, I'm just fortunate to have figured it out by now, right? That's the big thing here. Now, there's a good question here asked, and I want to make sure I answer it. Rasmus, the loss you're talking about with the covered calls, aren't they always less than the gain from the stock price? Well, it depends. And by the way, you got to remember, it's not really a loss on covered calls. It's missing out on the gains of the stock. So like if you have Google at 180 and you sell a call for 200 and the stock goes to 210, technically you're still, if somebody paid you $1 for this, you've technically lost the $10 difference in price minus the $1. You've lost $9, but you haven't really lost it because your stock went up to 210, but you have to sell somebody that stock for 200. You haven't lost money. You just missed out on the gains. That's it. You theoretically have not lost money because you own the stock. That's what makes it the covered part. It's a covered call because you own the stock already. They're just not giving you the gains because the stock went to 210, but you got to sell it to them for 200. That's the reason it's a loss. So your brokerage account will say, hey, your stock is worth 210, but you have a call that's lost $10, but you got $1 back. So you've lost $9 in the call, but you made $10 in the stock. So you lost $9. That's the whole point of it. That's the whole idea of it. That's the whole loss. It's not really a loss, if that makes sense. It's just a miss out on the gains, which is still important. So guys, I look at this as like, two choices. This is a good way to generate income and really feel like you're making progress while you wait patiently for stocks. This is really, really important right now. So what other questions do we have here?
So Mr. Green had asked about the example of VGT. I'm just scrolling back up to it just to make sure that I got that right. Okay, yeah, he said he has 236 shares of VGT in my Roth IRA. Can you run it as an example for me? He's just feeling a little nervous.
So, okay, VGT. Yes, I still believe that Bitcoin is not an investable asset, just like I don't believe gold is. Even though gold has mounds of history and use. Okay, we're doing a covered call. July 18th, 2025. VGT is currently at $630 per share. Okay. Now, for me personally, how do I scroll this to the left? Well, looks like I can't really scroll that to the left. Let's see if there's... there we go. Okay. So VGT, as I told you guys before, I like selling between 0.1 and 0.15 delta, which is a 10% to 15% chance that the stock goes to that price. So right here, that would be roughly $6.75 per share. I'm going to get 90 cents for that. That's the that's the bid. Interesting. That's the bid and ask right there. The last price. Oh, I apologize, guys. I was giving you guys two conservative numbers. I was even being more conservative. You got to go in between these. Look at this right here. It's about two, let's call it 250 per share. So you see the bid, the bid and ask. The last price was 225. What I like to do is I like to go basically in the middle of the bid and ask. So the bid here is 90 cents. The ask is 310. So that basically means the middle price is $2. $3.10 plus 90 cents is 4 divided by 2. So I'm going to get $2 per share. So what I'm going to do here is I'm going to go to my calculator, VGT, options return. It's a covered call. I'm going to go to 675. Expiration date is July 18th. And the premium, again, was $2 a share. Calculate. Not a good return. 3.05%. Now with covered calls, though, you're owning the stock and adding 3% to that. The question is that worth it to you? On the cash secured puts, it's much easier because I can say, well, I can make 4% holding the cash. So what do I need to make to do that? On VGT, you're basically just holding the company, trying to get some extra premium. The question is, what's the right number for you? Dalton, is there any specific ROI that you look for, or are you just basically looking at the deltas when it comes to selling covered calls? That's what I do. I used to look just for deltas. I didn't care what the annualized return was. I'm like, listen, I'm going to focus on the deltas, and wherever the return ends up, it ends up. Correct, LG. Bid and ask spread is how free brokers make their living. There's no such thing as free. You are correct. So if Dalton could answer that question for me, that'd be great. Correct, LG. Opportunity cost. I think Mr. So interesting question, John. I've asked my broker this before. They do not pass through the, and so I thought I could get the cash and that. They said, no, when you put something up as collateral for that, it has to go in a certain cash account that makes like no money. I don't get to put like treasuries up. I think it's absolute bullshit. John, I've had this conversation with them 1,000 times saying, guys, I'm giving you 90-day treasuries. They're like, yeah, it doesn't matter. I'm still working on it with them. I'm sure there's a broker out there who does do it because it's freaking cash. I want both. I agree with you. I thought I could get the premium and the interest. They told me no for right now, but we'll see. Okay. You have 7 and 9% minimum hurdle rate. So according to Dalton, Dalton, let me ask you this question. Would you even sell this right now? Would you even sell the option here if the 13% delta is 3% here return? No, you don't need to sell stock to do covered calls. You just need to own the stocks, Corey. If they get taken away from you, you're selling them. But our plan is to not do that. You sit there and you hold the stock, and somebody basically pays you for the right to take it away from you at a future price and a future date. At a higher price at a future date. Now, by the way, there's a way to make a lot of income off a stock you want to sell using covered calls. Let me blow your mind here. Let's say you own VGT and it's 630 right now, but you're like, no, I shouldn't use VGT. Let me use Google. Let's say you have Google and you're like, I don't want to own Google anymore because I think it's overpriced and I want to buy something else. What you could do is sell a put at a much lower price, at a much lower price here. Sorry, sell a call at a much lower price. You sit there and say, okay, if by July 11th it's over 170, I want to lose the shares. They're going to give you 1265. So the reason this is good is if it's above 170, you still get to keep your 1265 and they take the shares away from you. If it's below 170, you basically hedge some of your loss away. You keep the shares, but you also got the 1265 there. That's the benefit of options. You can basically use it as a way of selling shares you want to get rid of. But maybe you're like, you know what? I would keep Google at 180, but if I sold it for one, I'm fine with that. Great. We have talked, and this is going to be part of our group. We've talked about using charts and momentum to determine what prices to sell certain options at. By sitting there saying, hey, listen, if the momentum's up on a company and you're selling a covered call, you got to be a little bit more conservative and sell a covered call at a much higher price because it's more likely to hit. These are things we can do. These are the things we talk about doing. This is very there's way more levels to this. Or you just keep it simple like I have for the last 5 years. I have not implemented that strategy yet, but it's involving using most strategy of day trading to see where momentum is, but not doing day trading, doing longer term charts and saying, okay, there's support here. If the support here means that, and then all of a sudden there's a jump up and the charts do this, blah, blah, blah. It means there's a lot of momentum going up. I got to be more conservative. That's this kind of stuff you can use it for. Now, I've never back tested that. I've never seen a study that talks about that. It's a fun way of introducing options with trading and all these things. It's not for the faint of heart, but that's why we're not talking about it in this class. This class is purely about understanding the process of cash secured puts and covered calls. That is absolutely correct, Logic. So I miss out on gains and losses by holding. I do want to acquire shares at value prices. That alone makes this worth it because now you can use cash secured puts to be paid to wait for shares at lower prices. That's what's so great. Value seeker might be an idea. Oh my God. John. That makes me so mad. I'm so mad. I'm at Merrill Lynch too. I'm at Merrill freaking Lynch and they told me I can't double dip. That makes me so mad. So Taylor, like you said, Internet Broker pays you 4% of the cash you put up. So that's on top of the cash. Oh, that makes me so mad. That makes me so freaking mad. I literally had countless conversations with Merrill Lynch about this. Like literally, guys, I'm giving you the cash. What's the risk? Well, Paul, it's a bond. I'm like, it's a 90-day treasury bill. There's literally like 0 interest rate risk. It's 90 days. I'll do a 30-day treasury. I don't care. No, you can't do that. You're double dipping. Yes, logic. That's how you keep the stock. You close the option out before it gets called away, before the expiration date. That is correct. And when that happens, you have a loss on the option, but you have a gain on the stock. So that's the way it works. The bank automatically does it for you. Fidelity. Damn. See, the good news is if I can show my bank that and say, guys, come on, these guys do it. It might give me some. What's that? Okay, go for it.
Okay, guys. So live training with Paul, June 17th. Just want to make sure you know he's going to walk through live examples. That's worth about $5,000. You're also going to get the coaching session with Dalton on July 1st. He's already the accountability coach inside of the community. He's going through real examples, holding people's hands virtually. As Hans was asking, could he really hold his hand? He'll do it virtually and really just walk you through how he writes his options for Paul and Mo and help give you real examples so that you get it. That's at the end of the day, that's what we want. We want you guys to have success. So, and Dalton manages $90 million for Paul and Mo. So he's going to be able to help guide you with your portfolio too. You're going to get a quick start guide because we want to make sure that you understand things ahead of the 17th. So we'll send that to you after you sign up for the class. You're also going to get that covered call calculator that Paul was demoing for you. And you're going to get a full year of the Everything Money software, absolutely everything inside the stock portion of our platform. So as you see Paul in the videos doing the retirement calculator, the stock analyzer tool, of course, all those chats, you're going to get that for a full year. That's worth $588 a year as itself. You're going to get, of course, get a replay of all those calls, both the 17th of June and July 1st. You're going to get that, and you're going to always have those. We're also going to give you a guide, a wrap-up guide that goes along with it. And guys, this is worth over $9,000. You get it for $14.97 by clicking the link that we got pinned right there. So it's not selling. We're not selling you a course, even though we do have courses inside the software. You'll get access to those too, because we have options courses that you'll get. That's inside our exclusive content. It's a live event. You're going to be coached directly in a group with Paul. And
this is a very important aspect of our channel and our community going forward, because I really think that not enough people talk about this. And eventually, when there's a weed out in the market from all these people who jumped in too quickly and didn't understand what they're buying, especially on cash secured puts, it's going to be a really great environment for those people who are knowledgeable in it.
Yep. And once we go live on the 17th, you're not going to be able to purchase it. You'll miss out on those 2 classes. And you got 2 choices. You can either keep doing what you're doing and hoping it works, or you can join us. Take control of your portfolio, take control of your future. Paul himself would have taught this if he can go back and teach himself 20 years ago. I know
every
it's
time you say it, I smile because I'm just like,
but
you
said it though.
I know, that's what I mean. I'm smiling because I'm just like guys, I don't have a lot of regret. I have very little regret in life. Like, I do believe regret's useless. And even for the options, covered calls, I'm like, and cash secure puts, I'm like, it's a stupid regret. But I just look at it going, it's fun. The other thing is it's fun as F. It's like legitimately a fun thing to do. I know Dalton loves it. And by the way, a big reason I brought Dalton on was to do this for me. I said, Dalton, you're going to do research, but you're also going to handle these, and there'll be a good distraction for each other.
Yep. And I just want to answer for Nick. Nick's like, the broke man covered calls, obviously also known as poor man covered calls. Those are things Dalton will go over inside. Click the link, join.
Yeah. No, Hans, you get an extra year for free.
Yeah, if you're already,
Remember,
and by the way, it's a mix. When we had people join on the initial, like May 15th, when we had it at a lower price, and when we had it available as a bonus class, it was a mix of brand new people to EM, and they got a year for free of the software.
Can I tell you guys something about the software, by the way? Can I disclose what we talked about yesterday? Guys, you've noticed in our videos, we're not pitching the software as much, and there's a reason for that. We are literally talking about, I've always said I want to make it exclusive. We're literally talking about making it an application and invite only. Like literally, I just want to have very serious people in it.
Absolutely.
That's all. So if you're in it right now and you leave, I guarantee you're going to have to make an application to get back in.
Yep.
Like literally, we had this conversation yesterday. I've been talking about it. We had a game called Dynasty Owner. And Dynasty Owner was a great fantasy football game. And one of the things we did was we made it where you had to apply for it. And the reason being is it was a serious game. We didn't want just like fly by night people, and investing is a serious game. I don't want people coming into the community just trying to make a quick buck and leave. It was all about like, how do we get people who are serious about this? We're literally talking about this. When I say we're talking about this, like, this one's going to take some time to think about how we do it, but I'm telling you right now, it's going to become an application process.
So when we did it for Dynasty Owner, it was a full application process.
Yeah.
Like we asked questions like, how many championships have you won? How many playoff appearances you won? How many leagues are you in? Like we didn't want people like in 12 leagues, because we wanted people to be able to dedicate time to Dynasty Owner when we were doing it. So it was about finding the right mix, and then some people made the cut and some people didn't make the cut. So, but Hans, just to be clear, and anybody else, I know Hans loves to joke around, it'll be extended. So like if you had 4 months left, or, if you were an annual member of the software and you had 8-9 months left, whatever it is, you'll get a full year tacked on to the end of it. And during that time, you get that full community that's specific to options, and Mo's in there as well as Dalton. Mo was going to be like he'll be on future classes and stuff. He'll be here on the 17th with Paul as well. So to get access to Paul, Mo, and Dalton to be able to guide you through your portfolio is pretty valuable.
Yeah. And by the way, I've learned from Dalton's, Dalton sits there and does things that I'm the one that taught him these covered calls. And now Dalton has learned enough from doing the reps, saying, hey, Paul, I thought about this. And we have great conversations about this. And like I said, everything money, it's growing, it's doing great. And I just want to make it more exclusive. I don't want it to be this thing where it's like anybody and everybody can join. I literally want to make it where it's serious investors. We have to figure out the right questions to ask. It's not going to be money driven. It's not going to be like, how big is your portfolio? That's not going to be the driver. We're going to ask that question, but that's not going to be the driver of getting in or not. It's more about actually, we shouldn't even ask that question.
Can you go over the difference in retirement? You've given that options of like how this will make a difference of it's like getting $1 million extra in your account in the future. Obviously, we're not going to promise you exact returns and things of that nature.
Well, it depends on your situation.
But Paul can show you this. Go ahead, Paul.
So if you're 30 and you're going to retire at 65, you have 100,000 in savings currently, and you save 10,000 per year. If you increase that savings by 4% per year, so 10,000 this year, 10,400, 10,832, or whatever the number is, you make 9.5% return in a low-cost ETF. I'm assuming 9 to 10% return. During retirement, you make 6.5%. You're going to live to 95. Inflation's 3.5%. You make 80,000 a year. You want to have the same income. You have enough to retire. You retire with $6.6 million. Guys, just think about that. Making 80,000 a year, saving 10,000, you retire with $6.6 million. And you die with $8.9 million. If you're able to do covered calls and cash secured puts, and let's say you increase your returns by 3%. So it goes to 12.5% here. And let's say during retirement, since a lot of your money might be income producing assets, let's make it. And by the way, this might make it so that you can keep all your money invested. But let's say now you go to 8% return. Instead of 6.6 million, you now have 14.6 million. And instead of dying with about $9 million, you die with $100 million. That's big money. Now in today's dollars, it's $11 million. That is big time money. And I didn't increase the returns by 10%. I said 3% while you're alive, while you're working, and an extra 1.5% during retirement.
So
big game changer.
So like Tom, he's already 3x'd what he paid for that class in May. He's going to more than 3x it because, as Paul just showed us, it's going to continue to grow. It's going to continue to compound over the next several years for him.
Yep.
But for some of you, the next 30 to 40 years, it's going to be amazing.
I mean, that's just it. It's just like, it's a total game changer. I would show it's just like, guys, and I have 1,000 apartments, several businesses. I have the income I need. I look at this saying, but this is what I love about it. It allows me to make the income to pay. It allows me to focus my money I make on my business and the real estate to focus on the employees, to give them revenue share, things like that, while I live my life off the options. That's literally the goal. I'm not there yet, mostly because I spend too much money. I spend a lot of money, but like my brother's option income covers all of his expenses because he also spends a lot less money than I do.
And I imagine that he has some different stocks than ETFs.
He has a lot more stocks than I do.
And it just depends. Like the cool thing is like if you're like Mr. Green, this works with was Mr. Green the one that had Palantir?
Yes.
So he had Palantir, he had VGH. It works with that. It works for BABA. It works for Southwest. It doesn't matter what the stock is. So you guys could own Tesla stock because you bought it at a really good price early on. It works with your shares.
Yep. That's the great thing about it. Any other questions we have here, guys? All right, guys. So here's the giveaway. If there's no questions, I have the giveaway here. Here's the question. Now, for you to win, it's very important. You need to email VIP@everythingmoney.com. This is very easy. VIP@everythingmoney.com. Okay. The subject has to be your answer. This is all I want, guys. Everybody likes to say the subject is just your answer. Dalton is on Twitter. I need you to go find him. You're going to find him somehow. There's ways to find him. Somebody extremely famous just followed Dalton on Twitter yesterday or the day before. Who is that person? So you email VIP@everythingmoney.com. In the subject, you just give the answer.
Subject answer, 12:30, deadline.
Deadline is 18 minutes from now, 12:30. The fifth person to answer should be the fifth person or the first person.
We did a randomizer last time.
Oh, that's right. No, we're going to do a randomizer. So you have until 12:30. Everybody who answers is going to get entered in the randomizer, and then we will pick a winner.
Which I wonder if Rallo is on this.
Do not say it in here.
Rallo was our winner last time when we had a live stream in May. So not eligible, Rallo, because you already have the software for free. So, but somebody else will get it free for a year.
Somebody famous is Dalton. So you have to find Dalton on Twitter. And my Twitter is at EMPaulG. So somebody famous just followed Dalton on Twitter yesterday, the day before. Dalton, that person's still following you, right? Let's make sure that person's still following him.
Somebody said ChatGPT for the win. I don't think ChatGPT is going to give you the answer for Paul's or Dalton's Twitter.
Yeah, maybe funny. Not. Guys, this is a wonderful experience, wonderful class. I appreciate everybody who engaged. As you can tell, the people who know options are doing this now have such a passion for it because they realize the true potential of it. And we're still trying to learn more and more about it because there's other ways in which to handle it and do it. And I really, you talked to him this morning. That is such a cocky statement. That is so cocky. That is so cocky. He just said we talked this morning.
On the phone, Dalton, or was it sliding in the in each other's DMs? P. Diddy. Oh,
Paul Dalton home. That's true. Dalton, it's such a cocky statement. We talked this morning. Oh my God. So guys, remember, you get the time with me on June 17th. You get the time with Dalton. You get the 1 year of Everything Money software for free. If you're already a member, you get a 1 year added. You get the replays, unlimited replays. You get the guide. All of the stuff is worth almost $10,000. You saw the numbers, how it can change your life. If I told you right now, if your assumptions are like the ones I put up there, if I could give you $8 million, would it be worth it to you? Of course it'd be worth it to you. Go sign up. This is all for only $14.97. The last time we did it was $9.97, and it's going to go up in price from here.
Absolutely.
So guys, go sign up.
Yeah.
That's true. It's true, Hans. All of this is thank you, Anish. I really appreciate it. The only humble person here is Tim. Tim is very humble.
Okay, doesn't matter. But anyway, listen, and you're going to get these 2 calls, like Paul said, both on the 17th, these live events, I should say, and then July 1st. But then you're getting all the software, you're getting the community. Over the next year, you're going to continue to get your hand held by Dalton, as well as Mo's in there, and Paul will be in there, making sure that you get this. So listen, it's not just 2 days and you're done. It is taking the next year of your life. Really, like, what's that worth? The next year of your life to make the next 30 to 40 years insanely better.
By the
insanely
way,
better.
Yeah, it's great. Guys, thanks very much for joining us on the call. I appreciate it, and we'll see you there in the class.